Now, the third angry bear was retail.
The entire sector had a rough day thanks to the worst sales figures in 5 months. Sales were down 0.1% in July. Many are saying the economic stimulus has run out of juice.
Yeah, and will consumers find a new reason to spend? Let's ask our Bulls and Bears panel. Peter Schiff, Gary Kaltbaum, Bob O'Brien, and Tobin Smith. Tobin, let's lead it off with you. What do you think?
Well, there's no question, guys, obviously, that we haven't been able to measure how much the stimulus was. We don't know what percentage they spent, but we sure know that Walmart cashed a lot of checks. We know that Fred's and Costco, et cetera. So this is the natural sort of end of this stimulation cycle. The bigger issue on consumer spending, though, of course, is always employment rate. And I think as you watch the unemployment rate jump, the largest it's done in 7 years, at the same time spending went down, it does not take a PhD scientist to figure out that less employment makes less spending.
Yeah, but Peter, you came out with a perfect analogy once. You said the stimulus checks are like getting a blood transfusion from one arm into the other. It comes from us, and it's going to us, and then you have some drippage in the middle, so it doesn't do anything.
And then, unfortunately, we're borrowing more money and spending, and that's the problem. We have to stop all that. But, you know, you're talking about the retailers. They're the next financials. All these stocks are going to get decimated because the reason the financials are in trouble is because they loan money to Americans so they can buy stuff, and now the Americans can't pay it back. And so once they bankrupt all the financials, the Americans can't borrow any more money, so they can't go to all these retailers, so the retailers can't sell products anymore.
Gary Kaltbaum.
Every store in America is going out of business. Every store.
Yeah, Gary Kaltbaum.
Run for the hills.
Gary Kaltbaum, do you agree every stock is going to get decimated?
No, there's going to be some winners and losers. Look, you've seen Walmart hold up, but look, there has no doubt been absolute destruction in so many retailers out there, and it will continue. If there's anything we do know about recessions, is that the bad retailers go by the wayside. I've been saying Circuit City probably will go bye-bye. It's just a real mess. And let me just be clear about something. This is a consumer issue. This did not start today. This started months ago, and this is going to be a long while to get out of this. You have a consumer that's down and out, and until housing prices turn and consumers feel wealthier, they are going to spend less.
And Bob, talk about the historical importance of recession. When we go in a recessionary period, stores and businesses hunker down. Some do go out of business entirely, but others, the ones that survive as a much stronger entity.
Yeah, but that's a long time lag.
How long?
Well, we're going to be talking about a period of at least a year, 18 months before you start to see a recovery. I mean, it seems like you open the paper every day. Today you open the Wall Street Journal, it said Pizzeria Uno was on the cusp of defaulting on some of its loan obligations. It seems like we've read about a restaurant chain going bankrupt virtually every week for the last several weeks, and when that starts to move through, that's the small discretionary spending.
Of course, remember Mickey D's. Some do quite well now.
Okay, the X factor here is also going to be the dollar. Is the rise in the dollar going to start to affect some of those?
Well, don't worry, the dollar's not going to keep rising.
Tobin, let me get to you quickly. But I'm looking at the performance of the consumer discretionary in the S&P 500. They're doing much better than the S&P overall. Isn't that? Don't you agree?
Yeah. But remember, that's just a reversal of the shorting of it. You know, we are in a bear market. Let's not kid ourselves. We've had a bear market rally here, and perhaps the retail numbers will sort of tell us what the top is. We'll probably come back to test, this bottom again. This is what we do in bear markets. But there are opportunities here. Fred's is a company, for instance, a retailer that we've been owning and recommending for a long time, $8 to $12.50 in 2 months. Why? It's a discounter par excellence.
Hey, I got to ask Peter, how much gold did you buy yesterday?
I bought some gold stocks again, yes. I've been buying for the last couple of weeks.
Gold stocks.
Personally, for clients, I'm buying gold every day. But, yeah, gold's dropped. I mean, it's not as volatile as stocks, but it's dropped. It was over $1,000 an ounce.
Is it going to go below 800?
It already went below 800 yesterday. Will it do it again? It might. I don't know. But, it's going to go a lot higher than 1,000. It's going to go a lot higher than 2,000. Instead of making fun of me, Toby, for buying gold, you should buy some on these dips.
By the way, let me just add one thing.
Peter, this is what I do. I do make fun of you.
All right, Gary, very quickly. Go ahead, very quickly.
Part of the research I do, I'll walk into a Best Buy, go to the appliance department, ask them how sales are going. They give me this look like the world is ending. That's how you know there's an issue going on there, and it's everywhere right now.
I think we know there's an issue. Thanks, guys. Here's a look at what's still ahead today on Bulls and Bears.
Yeah, commodities moved to the upside this afternoon after posting steep declines over the past few weeks.
So where will commodities go from here? Sandra Smith joining us now with a story Lord knows.
The timing of this story is a little off because what we're talking about is how the tides are turning and commodity prices are now coming down since we've seen corn hit records, oil hit records. But just as it happens to be today, we saw oil spike up, corn, soybeans,
largely because of
high.
Russia and Georgia.
Yeah, obviously largely because of, but we saw also the dollar firm up. You know, the dollar has been dropping for the past 8 straight days, and it actually came back a little bit. But the big story here is in the month of July. You can see these commodity prices going back to July 1st to today. Natural gas down 38%. Corn's turned around. It's now down 28%. Silver down 20%. Crude, as we've been talking about, down 19%. Cocoa. So it's not only the energy products, it's the grains are coming off. The metals are coming back as well. What are the analysts saying right now? Well, some of the analysts out there are saying this could continue. Deutsche Bank actually came out today and said, you know, you couple what's going on over in Saudi Arabia, boosting oil production, and then demand down in the U.S. and Europe. Couple those things together, and they say that oil prices are going to continue to go down to $100 a barrel by the beginning of 2009. But then you talk to you talk to the Jimmy Rogers of the world,
or the Peter Schiffs,
or the Peter Schiffs of the world, and they're going to say China, China, China. The commodity story, the oil story, will continue because.
Or the dollar is going to continue to stay weak, and that'll drive up prices.
Exactly.
What people really want to know about is inflation. Inflation, it's so sticky. It's like glue. In other words, if the story is that the prices go down, oil prices go down, inflation may come down. But, you know, food manufacturers, airlines, package delivery companies, they're not going to lower prices anytime soon.
We don't have inflation because prices are rising. Prices are rising because we have inflation. The reason that commodity prices are dropping now is because speculators are getting out of the market. But the underlying trend is bullish for commodities, and inflation is part of the reason. There's some real supply and demand imbalances, but of course, underneath or underlying this commodity rally is inflation.
But Bob, shouldn't the Fed know that? Because you hear Bernanke himself suggesting that commodities are causing inflation, when in fact history tends to back up what Peter is saying, is that it's inflation that's causing commodity prices to go up.
But the Fed's mission right now has got nothing to do with what's going on in the underlying U.S. economy. The Fed's mission has been for most of this year and remains trying to reliquefy that financial
strengthen the economy.
They think it's accomplishing the same objective. I don't think.
So are they ignoring inflation entirely?
Absolutely, completely.
But Peter, what my point is that companies won't reduce prices. It'll go right to the bottom line. In other words, if oil goes down, big deal for them. They'll still keep prices high. No.
Well, as far as we talk about retail gasoline prices?
Oh, no, airlines, food manufacturers,
well, sure, remember,
delivery companies.
These companies didn't raise their prices enough when their costs were going up. That's why they have horrific earnings. So they're not going to immediately cut their prices. They're probably going to keep raising prices because they still haven't caught up.
Toby Smith, do you agree with what Bob says, that, in fact, the Fed is ignoring inflation, other than giving lip service to it?
Well, I mean, of course, you have to say they've ignored, because if you look at the real interest rates, you know, minus inflation, you know, real inflation, we're probably at a negative 1% rate. Remember, our Fed has 2 jobs. They're supposed to have money supply be controlled, have prices be firm, and look at growth. Right now, Bob's absolutely right. They're on the side of preserving the financial system, and they did it by some pretty creative stuff, creating these new, financing vehicles. But the other issue we're not looking at is, let's not confuse price inflation with monetary inflation. They have actually kept the money supply relatively low, number one. And number two, if you look at the unit labor costs in America, because that's the inflation that sticks, guys. That has not gone anywhere.
Right. You know what, Gary Kaltbaum, you look at the futures traders down on Wall Street, they're split 50-50. Futures traders are saying possible rate increase. Economists on Wall Street saying not so. Where do you see see the Fed going?
Well, first off, I just think the Fed's been behind the curve for so long, and the fact that they even say they're an inflation fighter is an absolute laugh. I heard that line. They have done nothing to fight inflation whatsoever.
But where do you see rates going by the end of the year?
I think they're just going to sit right here. My bigger issue is what happens to the real market rates, the 10 and 30 year. My biggest worry throughout the last couple of years, and amazed that it hasn't happened, that long rates start to shoot up because of the fact they have not fought inflation.
Well,
by the way,
although Bob, it's not just rates. The Fed has the power to soak up some of the liquidity, soak up some of the cash that's out there. That's what Steve Forbes says.
By selling bonds.
Yeah, exactly. Without raising rates, by selling bonds, you could take care of inflation, or at least hit it partway that way.
Well, they'd have to compete completely reverse what they're doing because they've just been churning out the printing presses, filling the entire system with money. So this would be a 180.
Toby disagrees with you on that.
Okay.
Well, but Bob, if that was right, then why are the inflation tips? In other words, the bonds that have inflation, why are they trading down like today?
Because they're
at the
tied to
lowest
the
number they've been in the
CPI.
last
That's
3
not
days?
the real inflation. People know that. People are wising up to that con.
A con. Whoa. All right, let's leave it
Con
there.
man at the Fed. We are going to leave it there. Thanks, gang.
All right, here's a look at who made. Welcome back. We round out our show today with what you need to know. Peter, first to you.
Well, you know, they just had these 2 surveys on that real estate site, Zillow.com. Last week, they showed that 2/3 of homeowners believe their houses have not lost any value in the last year. And then this week, they had another one that showed that 1/3 of the people who bought homes in the last 5 years now owe more than their homes are worth. And what these surveys are showing is a big disconnect between what houses are actually worth and what people think they're worth. And I think when homeowners actually connect the dots or wake up out of their delusional state, I think you're going to see a lot more foreclosures and you're going to see a much bigger problem for the financials in the housing sector.
So, Toby, are we living in denial?
No, I mean, some people live in denial, but, you know, some people bought gold at $980. They think it's going to $2,000. It's
Hitting below the belt already.
I've been buying it since it was in the 2s, Toby. Where you been?
I know. Because everybody knows that, Peter.
All right,
Toby, what do we need to know?
I would go another way, which is that, you know, people are worried about oil prices when it goes to the drilling business. And if you look at a company like Transocean, they're going to make the same amount of money. They're going to have the same amount of demand for their offshore drilling if oil came down to 50. So don't worry about oil prices here on these riggers. Let the oil prices come down to $100 and be a big buyer. I think this is a $200 stock in the next year because a huge amount of their new contracts roll over at double their prices. You're getting a buying opportunity here.
There you go. Bob O'Brien, what do we need to know?
You know, Americans drove 12 billion fewer miles in the month of June. That's the latest statistics out of the government. A 5% year-over-year decline. That means Americans are actually cutting back on consumption more dramatically than they did in the 1970s during the height of the embargo. So we're getting the message here. However, you wonder whether when we see the next round of data that'll show us some of the July numbers with the pullback in prices, are we still going to see the same sort of discipline on the part of drivers? I suspect we won't.
So you're not saying $50 oil anytime soon?
Certainly not this week.
That's a safe bet. Boy, you're really going out on a limb on that one, Bob.
My grasp of the obvious.
Way to lay it on the line, Bob.
Thank you, brother. Right here, baby. Right here.
Team, Bobby. Okay, Gary Kaltbaum, what do we need to know?
Our wonderful government just reported GDP for last quarter 1.9%, but unfortunately, when calculating, they use the inflation number as being only 1%. If they just use 4%, that's what they use in their calculation. If they used 4%, which would be normal, GDP would have been down over 1%. I would say our government is playing around with the numbers a little too much.
And how? In fact, the real inflation rate is probably north of 10% right now, so we're in a severe economic contraction.
I was being nice.
Toby, do you think 10% inflation? Do you see that anywhere?
Well, remember, in the Peter Black Hawk helicopters going across the land, he is saying that since they made revisions to the formula in 1984, 86, 88, 92, that if you throw all those revisions away, we may be at 10%. But if you're going to use that logic, Peter, then you have to say that, we don't have any GDP because we changed the way we account for GDP, so you can't have it both ways, man.
No, what do you mean? That's not having it both ways, but certainly we're calculating GDP improperly.
But let's get to hang on a second. What I want to do now is turn to the markets. Bob O'Brien, we've had 2 triple down days.
Yeah.
Where do you see the markets going tomorrow?
Well, we've also had 3 triple up days, 300% days. That's typically the time when we see
that was last week, right? That's classic bear market rally action. Now,
sure.
Right?
It's a time that we see a conversion from a bear market into a bull market. It may not happen. We may have to go back and test the July lows, but I suspect they're in place.
Well, Toby, how low are those tests going to go?
Well, you can assume that first off, this is August, so really basically it doesn't count for anything because the volume's so low. Let's get September in and let's see where remember when Merrill Lynch took this big write-off and the other guys took these big write-offs, everybody else now in the banking industry has to adjust their numbers. So you can bet, $1 billion dollars that everyone is going to be marking down just because they have to mark to market.
All right, Gary Kaltbaum, what do you see the markets doing tomorrow?
Simple. I think commodities hit a near-term low today, which means they're going to rally more. Unfortunately, all the consumer areas that are let off the low are going to head lower. That's retail, airlines, financials, and the like.
Well, Peter, I don't want to ask you about our market because I know what you're going to say. It's going to be awful. It's always awful. But the fact is that Europe is also seeing a slowdown. The Europeans are getting very concerned about the economic slowdown there. The fact that they are not going to be raising rates anytime soon, does that strengthen the dollar that you've been
we don't know that.
We
don't know that they're not going to be raising rates. Certainly, there's some
we got a pretty good idea about it. They haven't the last time.
But they might. But remember, the source of their economic problems is America, and not because we're slowing down. Their problem is they loaned us a lot of money and we can't pay it back. That's the problem.
Toby, the problem with Europe is they get quarter of their energy supplies from Russia too. Inflation is a problem. Am I right?
Well, the problem is demographics. Their average age of their population is almost 10 years older than the United States. So Peter's argument always is that we're going down to tubes. Well, if we're going down to tubes, then Europe is all the way down the slide board.
Right. Where does it even, Peter? Quickly.
Well, look, in the short run, we'll probably gold with this big drop down. But
no. But where in the world? Do we look to Asia only?
Long-term, Asia is great. But I think Europe still looks good in the short run. I think once they shrug off these horrendous losses that they made lending money to us, they're going to be able to move forward. We're stuck because it's our economy that's the problem.
All right, we got to leave it there.
Gentlemen, thank you very much. We'll see you back here later. We thank you very much for turning in and watching.
Happy Hour with your hosts, Rebecca Gomez, Cody Willer, live from the Bull and Bear Bar in Manhattan is next.
We'll see you back here tomorrow.